One thing to consider if you're going to get a vendor take-back mortgage is that you will probably need private financing to get it across the finish line for your first mortgage, your majority finance. Private lenders are much more likely to be tolerant of a vendor take-back mortgage. And so if you're a first-time investor or you're doing your first vendor take-back deal and you got 20% like I did with Milena, don't expect that you're going to be able Schedule A bank financing on your first deal. It's just not that likely.
Now you get me an agreement, a purchase and sale or an offer, and it says that I'm giving you a 20% vendor take back. So 100,000, 5% interest payable monthly. Then I take it to my lawyer and my lawyer says, don't you dare do this deal because it doesn't say anything about the equity. It doesn't say anything about the loan to value of my loan. So the downside for me is you could get a $400,000 mortgage in this example. You could also get a $450,000 mortgage from a private lender at 90% loan to value. Now I'm 110% loan to value. For the seller, the downside is it could end up being quite risky if the terms are not set out properly as to the loan to value. And also because a lot of the time for the seller, it's not treated like a private mortgage, even though it is. The terms that we would use to protect our private lenders are not always included in those agreements when we receive the agreement already signed. So actually I had one 3 days ago, where a client of ours is selling a house and is offering a vendor take back to the buyer. And so he reaches out and he says, can you take a look at the agreement? I'm like, oh, hell yes. So what I did is I included a lot of those terms, fees upon default, the seller/lender can get possession upon default. There's so many clauses that they must obtain insurance, the buyer must obtain insurance, protecting the seller, putting the seller as lost payee, must obtain title insurance, must cover the legal fees, right? Because the mentality is, or the mindset is, well, the borrower pays all the fees. That's only because that's standard to have in a contract that the borrower pays all the fees. It's not given and it's not by law. So I included in the agreement that the borrower/buyer was responsible for all of the legal fees, not only to set up the mortgage, but also in case of enforcement, because that could be extremely expensive to hire a litigator to enforce on this mortgage if there's default.
Freedom is within your reach if your foundation is strong. See you on the next one.